Yes, you should tell me. That's oh, fun part. But that we'll do more of that.
Okay, welcome back everyone. Sandy told me I had to get started now, and I was surprised so many people showed up again. I thought Sandy rang everybody off. She did run a couple off. Won't say any names, but anyway, we've got the experts here tonight. Thank you all for being with us. We really appreciate it, and I hope everybody got something to eat. It's really good. Thank the town of Richland. I say Tazewell. Whoops. I think Tazewell County all the time, so that's why it comes out. But
That's good save.
yes.
Good save. That's a good job.
Thank you, Richlands, for hosting us tonight. We certainly appreciate the food. It was delicious. I don't know, Tim, is Tim going to come?
We're gonna let, no, he's out of town, but the mayor's gonna do introductions.
Okay, I'm going to invite the mayor up to say a few things, and then we'll do a couple of other things.
Thank you. So I really thank you guys for being here. We appreciate it. Thank every one of you for coming. I'm not going to stay for the entire meeting. I've got company in from Austin, Texas. So they came a pretty good ways, and I need to pay attention to them, whether I like them or not. Just not being filmed, is it?
Yes, it is.
Always.
I mean, not where my wife will get it.
I don't know where she's going.
It's
I'm
being
kidding.
recorded.
But I do. I'm excited to be here. I'm glad to see this many people here. And I will apologize for not staying the full time with you, because I'm glad to have you here. And I hope you enjoy being here in our town. And I hope you all try to come back down Saturday. We talk for a festival. Okay? Thank you.
Okay, now for our speakers, our guests tonight, I would like to start with you. Just introduce yourself and tell what type of business you're going to start up, or what business you already have. That way, just give them a little bit of background.
My name is Colin O'Donnell. I'm looking to start a coffee shop in Bluefield, Virginia. I'm originally from Buffalo. I went to Bluefield College.
I'm Kathy McClanahan. I live at Wardale, and what I would like to do is use my home as a bed and breakfast, which I did before several years ago, and also as an antique shop, vintage collectibles, that kind of thing, which I have a huge collection of, and also eventually as an event venue for receptions, weddings, meetings, whatever. I have a large place and a lot of outside area that's landscaped to use for those kinds of things. So that's my ultimate goal.
Excuse me. I'm Clint Neal. I've got Your Great Escape in Tazewell. It's a restaurant and catering company. I've been in business for about 17 years, and I want to do also offer retail items, whether it be pickup of food already prepared for people to pick up and enjoy at home. So.
Bill Haver, and this is my daughter Jessica. And our company is Appalachian Treasures. Our idea is for a craft or vendor mall, antique mall in Bluefield, Virginia.
Hi, I'm Melissa Mitchell. I own Scraps and Stuff up at the Stillsburg Plaza, and I own Country Elements. I've been in business for about 6 years.
My name is Debbie Bowman, and I'm
recently opened up Action Camp in April, and my goal is to just expand it.
My name is Susan Jewell, and I represent Get Well LLC, which will be a health and wellness coaching service.
My name is Jeff Shepard. I'm from Bluefield, Virginia. I am a creative. I have a degree in graphic design and creative advertising.
Introduce who you're representing.
I'm here on behalf of my son, Blake Gray. He is working on opening up Cold Town Taps, which will be a tap room. It will have a food truck. It will be centered in Richlands. We are Richlands natives. I wasn't real sure about the idea when Blake kind of put it on the table, but when you see your child fulfilling a dream that he's had for a very long time, you just get on board. So that's what we're doing.
We're so excited for all of you, and we're excited for the businesses. We are really thrilled to have new business startups and to try to take care of the new ones as well. I'm not sure who's speaking first, but did y'all draw straws or something? No, just whoever wants to start now, we'll ask you to come on up, or how you want to do that.
My name is Michael Bandy. I am a CPA here in Richlands and also have an office in Virginia, in Bluefield, Virginia, and teach part-time at Bluefield College. So Colin, tell Mr. Hyde, you got extra credit.
Yes, sir.
All right, very good. We specialize in small businesses. We also do trust. We do estates. We do individual work. But a lot of ours is tax-oriented. Not really into auditing, things like that. But we are interested in, I'm hearing people that are wanting to start a business, people that are expanding, and people that are established and wanting to do more. I think all of it's great. Tonight, let's just have a conversation. That's the biggest thing that we want to do here. Basically, if you think of your business as a chair or as a stool, it's a three-legged stool. And for your support, this is our time for us to give our part out there. You really need an attorney, an insurance agent, and an accountant, because that's the kind of support that's going to give you administrative support, and make sure that you are on the right track on what you're doing. You got the idea. Let us help you make it into a final point, and also make sure that you're in compliance with what you're supposed to do. Okay? That's it.
I am Barbara McMillan at Trust Point Insurance. My two sons are business people here in Richlands, Marco Warner and Brent Warner. So I'm probably always going to be Barbara Warner to a lot of people. But Jim and I have been married 35 years. So we offer all types of insurance, and primarily we're a commercial lines agency. When you start a new business, you go see the attorney first, probably to set up the structure of your business. You go see Mike and a CPA to set up your books. You're all excited, and then someone says, the bank or someone says, what about insurance? And you roll your eyes. So, well, I'm that person. But just listening to you introduce yourselves, you've got premises liability, slip and fall exposures. You have product liability for some of the food services that you're going to offer. You probably need professional liability for some of the healthcare services that you're going to offer. So when you set up your entities, whether it's an LLC or a corporation, and I'm glad Shannon's here because he can talk to you about protecting your personal assets. But when you set up those corporations, unless you have insurance, your business assets are exposed. So there's lots of nuances and coverages for all types of the businesses that you represent. I'll answer some questions, and I'll let Shannon go ahead and introduce himself.
I'm Shannon Cook here from Richlands. Been practicing law in Richlands and Tazewell County for almost 30 years now. I have a firm that's across from the high school, Cook, Short, and Keene, and my law partners and I do basically general practice of law, a lot of courtroom stuff, but I do a substantial amount of business advice and structuring, setting things up like that. I leave the hard stuff to people like Mike over here, the accounting stuff. Lawyers really aren't good with numbers. Most of you, it looks like you have had some experience in setting your business up, but there are nuts and bolts things that you run across that you don't see every day that I do. Dealing with leases, dealing with people who owe you money, trying to protect yourself when you owe people money, things like that. That don't come across every day. You might need the services of an attorney. Certainly my firm can help you with that. If you're just starting out, the decision about what structure to do, whether it's a proprietorship, LLC, or a corp, or an S corp, that's something that I can help you with, along with Mike over here. Licenses, complying with state reporting. Being on the lookout for things that may come down the pike with respect to regulations from the states and your municipalities. Those are things that I could help you with as well. So feel free to ask whatever questions you have, and we'll see if we can help you out.
Okay, it's up to you all. This is your opportunity. You got questions?
Go ahead, Colin.
In regards to small businesses, what is the average cost for insurance?
That's a tough question because the cost is going to be based on either receipts, in some instances square footage, and then in some policies it's going to be revenue, professional liability. It's going to be the types of personnel that you have, the number of licensed professionals that you have. So it's going to vary. You had the catering business?
Coffee shop.
The coffee shops, now we have, a lot of companies have a business owner's policy where your property, your liability, your business interruption is all in one package. If you don't do a lot of frying and things like that, more the sandwich type coffee shop, it's fairly easy depending on the amount of contents that you have. And the receipts the first year, you should probably be able to get a business owner's policy for under $1,000. Most minimum premiums are $500, and that would probably give you $1 million in liability. Don't forget your workers' compensation. If you have 2 or more employees, you're going to have workers' compensation. But let me just add that just because if you only have one employee, and that employee is injured while in your employment, you're still responsible. You may not be required to have insurance, but you're still going to have to pay for that employee's injury. So think about that even if you have one employee, think about the workers' compensation side of it. The one thing that a lot of the claims that we're seeing right now is the employment practices liability, your employees. And a lot of the business owners' policy, like we're talking about for a coffee shop, would incorporate some level of employment practices liability into the policy, maybe a $50,000 limit, which is pretty low, except for a small business that might be sufficient. That's going to protect you if that employer or employees say that you harass them in any way, verbally, if you sexual harassment, job discrimination, that type of things. That's all built into a business owner's policy. If in this world that we think about the perfect policy, it would be a business owner's policy. I think most of the individuals that are today are not going to be that are in the room are not going to be eligible for a business owner's policy, just because some of the exposures are more than because the exposures are more. Your professional liability policy and what you do is not going to be under a business owner's policy. You're going to have to get separate policies for property liability, then you want some general liability for your premises liability.
Could you talk about the advantages of, say, setting up a business as an LLC or an S corp or otherwise?
Do that, or, yeah.
If you want to start on the part, now go to the tax part.
Okay. Well, the advantages of having an LLC or a corporation of any type, the obvious thing is you escape personal liability for debts and other judgments that affect your business. If you're a sole proprietor and you're driving your food truck around and you hit somebody, You, your home, your car, your bank account, all your personal assets are subject to being levied on or sued and to satisfy the judgment for the injured person. If your business is incorporated or with an LLC, the liability that you have personally is limited to what is in the business. So if your house was not in the business name, your house would be protected from liability in case something happened. So that's number one of the advantage for having limited liability or a corporate entity. The advantages and disadvantages between the two: corporation, particularly an S corp, is taxed much more friendly to a small business owner than a regular corporation. An LLC can be taxed the same way. The corporate structure is more regulated by the state. There's actually a state corporate body of corporate law which more or less is default off-the-rack rules about how you can run your business, voting, mergers, transactions, officers, directors, liability, things like that. LLC is a little bit much more free form. My preference would be for my clients would be to go to the route of an LLC. There are less reporting requirements to the state, less bookkeeping that is required by the state than an LLC. So it's probably more flexible to you. You get to write your own LLC management agreement. So I would prefer my clients do an LLC. Either way, it's you can manage them much more flexible than a regular corporation. So.
Now, as far as the tax standpoint, now, here's the thing. Every tax answer should start with "it depends." That's a great tax answer right there, is it depends. Because it does depend on what kind of business you have and what you're doing. With an LLC, if you're renting property, for example, say my wife and I have 3 rental properties that we have, and we go through an LLC. The LLC for us, as Shannon pointed out, very much more flexible for us. Tax advantage is that it's taxed in an LLC the same as it is in an S corp because it's something called passive income. Passive income is stuff that you don't have to go out and earn. It happens just because it's there. And rental property is one of those things, like a bed and breakfast is one of those things. So from a tax standpoint, an S corp and an LLC in that situation is the same. Now, let's go back to the food truck, for example. Well, the food truck, you're going out and making money by the sweat of your brow and the crumbs off the table every day, right? That's earned income. And under an LLC, that could have additional tax coming through to you that aren't necessarily there in an S corporation via self-employment tax, okay? Self-employment tax being the employer and employee share of Social Security and Medicare, okay? With this S corporation, that doesn't happen because everything that goes through to you as an S corporation is just treated as if it was investment income. What you have to be careful of is you want your S corporation to pay you a reasonable salary, because the IRS will come in and say, you have an S corporation, you had $100,000 in profit and you paid yourself 0 salary, you escaped all this self-employment tax, shame on you. And they will try to impute that tax on you as self-employment tax. So as an employee of your own corporation, you would like to pay yourself what you would pay somebody else to do similar work, okay? An LLC can be taxed as an S corp if you decide to. It's a form that you send to the IRS that says, hey, I'm an LLC, but I've decided I want to be taxed as an S corporation. That's okay too. So even when you get into what you're doing, if you see that your needs change later on, you can change how the IRS recognizes you as far as your business entity is concerned.
That's another thing too. You can also change from an LLC to a corporation and back. It's a little cumbersome process, but you can do that. I found it's easier just to set up a new business and transfer the assets from one to another. But the key for you on a day-to-day basis, I would say an LLC would be less daily work involved as far as record keeping and things like that. But your payroll, your self-employment taxes, Mike said, those would be the same for both entities.
Does an LLC protect you in terms of, let's say you're sued for, let's say, okay, I have my B&B, and somebody falls down the stairs, and they sue me for negligence, let's say. They say it wasn't correct somehow. Something was on the step, or it was slipped, or whatever. Does an LLC protect me in that instance?
Yes, but if the home that you're renting out is, I would assume, owned by the LLC, it would. LLC stands for Limited Liability Company. It's the same liability protection that a corporation would have. It's just less formal and less structured than a regular corporation. So yes.
And even going, just to tag on to what he's saying, with an LLC, if it's a single member LLC, from a tax standpoint, you don't have to set up another tax return. If you're a single member LLC, you report your LLC activity on your individual tax return. If you're renting, it's on your Schedule E. If it's earned income, it's on a Schedule C. So you don't have the additional administrative stuff of having to do a separate tax return for the LLC. An S Corp is its own individual legal tax entity. And so it has to have its own tax return too. So it could cut down on some administrative costs if you go LLC. Go ahead.
A couple of years ago, Chipotle had a major problem in their supply chain. They had an E. coli outbreak. I'm looking to use local farmers myself in terms of fresh produce. If they had a problem with their supply, such as that, would I be protected by my insurance, or would I have to go back and take it up with them, or how would that work?
Yes. The situation that you're talking about, both you and that farmer would probably be named in a lawsuit. So when you're buying locally from those farmers, I just say be cautious. I'm not sure if they're going to have a liability policy, but you should ask the people that you buy that produce from provide you with a certificate of insurance. It's at no additional cost to them, and you could be named as an additional named insured on their policy, or additional insured on their policy. And their policy then would respond in a lawsuit if you are also named first, and then your policy would respond after that. But in a situation like that, everyone's going to be named in a suit. And that's where your liability comes in. But I just caution anyone that's starting a new business, if you're doing business with other people that are supplying products or services to you on a regular basis, to ask them for a certificate of insurance.
Even going further, if someone is doing contract labor for you,
Yes.
they have to have a certificate of insurance, or you may have to cover them under your workers' comp, true?
Yes,
Okay.
yes. The workers' compensation policies are auditable policies, and in a business that you have you have a contractor that's working for you, and you're paying them for that service. In the absence of their policy, your policy states that it covers uninsured subcontractors or contractors. So if the auditor looks at your records and sees that you have those types of services, they'll ask you, where is the certificate of insurance for these people? If you don't have those certificates, then they will use that as payroll on your policy. And a lot of people don't understand how expensive that can be if you don't ask for those certificates of insurance. Thank you, Mike.
To follow up with that, so you see it's a good idea if you are going to get independent contractors to work for you in any capacity. Get a contract, get something in writing. Make sure all these bases are covered.
And to go on that, see, it's like we're playing tennis. Isn't this great? Here's a little trick. Not a trick. It's a hack, right? Is that what they call it now? Life hacks, right? With your independent contractors, you want to get a form W-9. You guys know what a W-9 is? It's like a W-4, but for an independent contractor. You want to get the W-9 so you can do your 1099 forms at the end of the year. If you pay an independent contractor more than $600, you're required to give them a Form 1099. Here's the trick. Have them fill out the W-9 before you give them their first check. This way, when they come to pick up their first check, I'd love to give this to you. I have to have this information first. And that way, you've got the information you need to do at the end of the year for the 1099s. They've got their check. Because what you'll see happen is you don't get it, and they've gone on to move to another job or another state, another country, somewhere that you're not. And you're not going to be able to get that information, and you're not going to be able to fill your 1099s out.
Can you, let's say I hire groundskeepers and housekeepers to assist me. Can I treat these people as contractors?
If that's the way that they want to be treated, yes, you can treat them as independent contractors or employees. There's,
20-factor test.
yeah, go ahead.
I was going to say there's a 20-factor test that you have to be careful in this respect. If you're determining when they work, where they work, how they work, you supply their stuff. In other words, if it looks like a duck, walks like a duck, and quacks, it's a duck. The IRS has a 20-factor test out there that asks these questions that proves whether they look like an employee or look like an independent contractor. Once had a situation where a client asked the person to do work for them. They said, awesome, I want to be an independent contractor. No, I've got you working for me. I really want to pay you like an employee. No, I've always been an independent contractor. It's how I've always done things. Well, apparently they hadn't done it this way, because when they got the 1099 at the end of the year and saw their tax bill, suddenly they wanted to be an employee. And then they filed a Form SS8 with the IRS that says, I'm an employee. He didn't do what he was supposed to do, and the employer had to go back and pay the self-employment tax and all the other stuff that went with the person being an employee. So just because they say they want to be a contractor, make sure that you're looking at those tests and say to yourself, let's make sure you're a contractor according to how I see things and how the IRS sees it. You just want to protect yourself. Because even if the employee says, or the contractor says, I promise I won't do anything. Yeah, Mike Tyson once said everybody has a plan until they get punched in the mouth. And when they end up having those taxes show up, things change. So make sure you're protected up front.
It's easier for them to be a contractor during the year because,
Get more of a net. On the
yeah,
check.
you pay them, what, $300 a month to keep your yard mowed and your hedges trimmed, and you write them a check for $300. If they were an employee, you'd hold those taxes out. And the self-employment, the FICA, the Medicare, you hold those out, they would get less than $300. So they want that money now up front. But when they're hit with the 1099 for $3,600 at the end of the year, they're like, wait a minute, I have to pay taxes on this, and this is my taxes? That's exactly what he's saying.
Yeah.
But yeah, I would recommend you make sure that your people know exactly how they're going to be treated, and either get them to do a W-9 or a W-4.
Yep.
So if I'm having people print decals and logos and things like that, are they a contractor for me? Like they're a company, they're a print shop?
Or if they're a print shop, you're good.
Oh, okay.
That's fine. The thing is, if you have someone that is under your employ, that you determine their hours, when they come in, how they work, you supply their tools to them. It gets down to as fine as you determine lunch breaks, so on and so forth. They look like an employee at that point. But if they have their own company, they're doing their own thing over here, and they can work for you or for anybody else. And so, in that's the case, they're a contractor. You're fine. And if it's a corporation, you don't necessarily have to give them a 1099. 1099s go mainly to individuals. Okay, so if it's a company out there or an attorney, you got to give them the 1099. But if it's just if it's a regular corporation that's doing work for you, don't worry about it. See, we're starting to work our way across the room, so you guys got to get ready. Okay.
Gotta say something, Debbie. I think that what you're doing it's an exciting field, and most of the conversations that we've had in the last few months have been about the hemp, cannabis, marijuana, and it's really coming to the forefront as people. It's a new product, and so it's right now. There's probably not a standard carrier like the Travelers, Hartford, that writes this, but and the problems coming in with the growers. But you're doing a finished product, yeah. So it's a little bit different. So you're going to have to look around and be very, very careful. And I'm sure Shannon and Mike both could speak to this. Look at the exclusions in your policy, because this is a new product. And sometimes if you get, this is, like I said, it's not going to be a standard company that's going to write this. So some of these policies it's going to be pretty, it may be a little bit more expensive. So you may have already checked on that. but look at the policy and go over those exclusions with your agents and make sure that you actually have coverage, because some of them, there's so many exclusions, they're just a skeleton of a policy.
Is there anything in particular that I should make sure that's not excluded?
Well, the product's liability. Yeah, the product liability, because
What's
it's,
the company that I buy the product off of, be like you all were talking about, they would be responsible?
They would be in the distribution chain. If something were to happen to someone who used your product, people like me would sue you, them, anybody who supplies them anything. We'd sue everybody we can. So you would hope there would be some sort of coverage for you on down the line. And like she said, if you are on their policy as a named insured, then their insurance company also will come in and try to help defend you in the suit if there is a suit that's filed.
are you putting your own label on it? Okay, good. Yeah.
No, I'm just buying it from a company that actually I kept looking and I just, one that caught my eye, and I called them and talked with them, and I just started out with that product. And I do have probably 4 or 5 different people that I buy products off of, that one in particular just for the CBD products.
Right.
So I just basically deal with one with just the major stuff like that, so.
With you selling that, with you selling someone else's goods, you are warranting yourself to your customers that what you're selling is fit for the particular purpose you're selling it for. And it's a good product and it's not going to be harmful. You are making those warranties yourself, so you need to trust whoever you're dealing with that they're warranting the same to you.
Well, I think all the products that I get has been third-party tested, and you get certificates on some of them, and so, I don't know if that means anything or not.
I mean, if that's how they're vetted and if that's how the insurance company you're using would say, okay, these people are on the up and up, we're going to cover you, then I think you're fine.
And Deborah, I just wanted to add something. We had the Department of Agriculture speak at the Tobacco Commission yesterday, and they're putting a lot of information out because they're doing a lot of research. There's a lot of farmers that are investing in growing, but how's that going to impact Virginia? So, periodically I would suggest you go and look at the website and keep up with what's going on in Virginia and how that's going to impact you going forward.
A lot of farmers want to switch over to, from whatever they're growing, they want to raise hemp. They've got, some guy in Christiansburg's got, along where you can see it off, the island, more acres, recently for it, put some more in.
Wow.
Well, it's an up and coming industry, and managed correctly, it could be a good thing for our area too.
Exactly.
But there's all kinds of things going on with it, so yeah. I'd be interested to go to the Tobacco Commission or some of those seminars to see how that's. And I know that some of our principals or the producers are looking at that and just to make sure that the products that are offered are good products.
Well, the discussion was, right now the price is up, but a lot of the folks are thinking this is going to be a fad, and if the Food and Drug Administration starts putting a lot of, I guess, more interest in this and regulations, that could change. But we know in Southside there's a lot of tobacco farmers are now changing into hemp production, which means, all of that production for the final product is being shipped out of Virginia to get the value added to it. Is that something that we might want to look at in the Southwest and Southside Virginia? So, but who knows how long it's going to last.
I have a CIC designation, and I have to do an update every year to keep my certification. And I went to a seminar in Virginia Beach a couple of weeks ago, and it was like I was in a different world because the topics were drones, and the first half of the that portion of the seminar was on aviation, which I had never taken before because I don't do a lot of aviation, but you have to understand aviation then to understand the drones, and it was so interesting. Then the next day it was on vaping and hemp and cannabis, and I thought, it's time for me to retire. These are things I have not heard of, but it was very interesting, very interesting. And there's a question on the applications now that do you operate drones? Do you have drones? And I don't know that any of you are thinking about that, or it's a question now on the applications.
On the accounting side of things, when we go to meet with you or a CPA on small business, what kind of things do we take care of to set up our books, and what kind of stuff is covered in that?
The thing about setting up your books, I'm glad you brought up actually setting up your books, because what happens is you get into sales, you get into work, and man, I'm bringing in money, I'm working 14 hours a day, I got to get this stuff taken care of, it looks like we're doing great, I'm paying my people, everybody's happy. But you got to be aware of a couple of things. Accounting is here for two reasons. It's here for management purposes, which is to let you know what your business is doing, how it's doing. The other part is for tax compliance, because at the end of the year, whether you're Schedule C, an LLC, an S corporation, whatever, you got to report your profit and loss or loss to the Internal Revenue Service and to the Virginia State Tax Department. So what I suggest to people, and of course Intuit's gone in up at Bluefield, we find that most of our clientele here use QuickBooks or Quicken, something like that. When they first start out, they'll use Excel spreadsheets, or they'll write it down on a piece of paper. My favorite was the gentleman that brought in an ice cream bucket full of receipts. I like that. It was Neapolitan. Who could say no? But we kind of had to have an educatable moment there and say, let's keep our books a little bit better than just bringing me receipts, okay? Because if he's bringing this to me, you know that he's not looking at what he's doing, right? And so you want to have some sort of a system, and it starts with the checkbook register, honestly. Take your checkbook register, put it on your program, and spread out, okay? These are my supplies. This is my advertising. This is my cost of goods sold. This is my payroll. Things like that. What you'll notice in your business, at least in the business that I've worked in and that I've seen, is that eventually you'll start building trends. Once you get 2 years, you can now start comparing things, right? When you get 3 years, now I can look at trends. I get 4 years. Hey, my utilities have been fairly consistent for the past 3 years. But my costs of goods sold went way up last year compared to what they normally were. What happened? As your company gets larger, or as you get more involved in it, these numbers are going to mean more to you than it is when you first start out. Because when you first start out, man, you're just trying to survive. I'm trying to get myself established, to get myself going, and make sure that when I'm done at the end of the day, I've got a positive amount in my checkbook. But as things get larger and larger, you're going to want to make sure that you have the ability to see what your business is doing, and a good accounting system is going to do that. Oh, and at the end of the year, when you do tax time, then you come to me with the trial balance and say, all right, Bandy, do my tax return. Because everything's set and ready to go, and it saves you a little bit of money, because I'm not having to take an ice cream bucket and tear receipts apart. Okay? Help me help you. It's a good question, Kyle.
When we finally get to the point where we're starting to make profit and we're able to pay ourselves, how does that happen? Do we set up a payroll for ourselves, or do we take it out of the? How would that happen for tax purposes and for legal purposes?
Both, I guess, be the same for tax or legal purposes.
Yeah, either way.
It depends on your structure. Do you want to treat yourself as an employee of the LLC or an employee of your sub-S corporation, or do you want to treat yourself as an owner and make yourself a distribution? The difference, I think, tax-wise would be: are you withholding taxes or not on the money that you're paying yourself?
Yeah. If it's a Schedule C or a sole proprietorship, you don't really pay yourself a W-2 per se, because all that profit's going to flow through to you, and you've got to report it all as income at the end of the year anyway. Okay. If you're an S corporation or an LLC, taxed as an S corporation, now you're not just an owner, but you're an employee too, and you can divvy up your profit between: here's my profit as an investor in my company, here's the amount that I paid me as an employee, and that's where your Social Security and Medicare comes out of. Do you have to have a separate payroll account? No. But what you will have to do if you haven't already gotten one, is you'll have to get a federal employer ID number, okay? Because now, when you start paying yourself a true payroll, a true paycheck, now you got to start reporting and paying your payroll taxes monthly to the IRS and reporting quarterly to the IRS what your salary is, what your withholdings are, what your Social Security is, and what you've deposited in payroll taxes. Those 4 quarterly reports add up at the end of the year to total into your W-2, which is what you're used to seeing. I get my W-2 at the end of the year and I file my tax return.
Now, remember what I said in response to Ms. McClanahan about a contractor or an employee. If you are the only worker for your business and you just take money when you need it out of your bank, you're going to end up at the end of the year with the equivalent of a 1099 with a ton of taxes you're going to have to pay. And you're going to be like, well, where did this money, I don't have this money to pay it. I spent it all living. That's one of the, I guess, advantage, I don't know if you want to call it an advantage of putting yourself on as an employee and withholding payroll.
Other thing is too on withholding, the withholdings that you do, normally you're supposed to pay, if you're a self-employed individual, you're supposed to pay your taxes once a quarter, right? We all dread the quarterly payment, true? Okay? As an employee, when you have your withholdings done, that withholding, even though it happens all throughout the year, is deemed as if it happened January 1. So it helps keep you out of an underpayment penalty situation. Now don't go crazy the other way and pay yourself a salary before you start making money. Because what happens is, I've seen people, I'm a CEO now, I own my own company, I got this. And they'll pay themselves a salary and then they got to go pay the payroll taxes, and they don't pay the payroll taxes because the payroll taxes are more than they can afford. Instead, they should take out a distribution to begin with. What happens if you don't pay your payroll taxes? You get letters and notices from the IRS that says, you really should have paid your payroll taxes. We're a little upset. Maybe you should make arrangements. If you continue to ignore them, then they will come visit you personally. And in the end, they'll put a lock on your door. And payroll taxes are no joke, man. Don't fool with them.
I have seen that happen. There was a law firm that I was aware of somewhere in Southwest Virginia, and the partner, the managing partner, was skimping on paying the payroll to make ends meet because times were hard for the firm. He got a visit from the IRS, and they said, you know, we'll put you on a payment plan that we think you can afford. If you can't do it, if you miss one payment, we will be here. We will have the federal marshals put a lock on your door. No one will be able to come into this firm, and we will take it and auction it off. The thing with payroll is you're dealing with other people's money. That's the way the government looks at it. You are paying someone a paycheck for something that they did, but you're not giving them the full paycheck. You're withholding back what they'll end up having to be responsible for and pay the government come April 15. Yeah. So they get real upset when you're messing with other people's money.
Yeah. They call it a trust penalty because you're holding that money in trust for the employee. That's why they get a little agitated.
I can add something right now.
Oh, please do.
All right. Just a few cautionary things. A new startup, you probably, or you may not have a business auto policy, a commercial vehicle, and you use your personal vehicles in the line of your business. Be careful not to put a sign on it. Or paint something on there advertising your business if it's insured under a personal lines policy. Because there's an exclusion in your personal lines policy for business pursuits. And if you have an accident and the adjuster comes around and he sees that sign on your vehicle, he says, well, were you using this in the course of your business? And you say yes, and there's an exclusion in your policy, it's not going to be covered. So be very careful. You know, and I can't speak to every policy, but if you're doing this, check with your agent. And there might be an endorsement that they can add to your policy. It's going to cost you more. But check and make sure you're doing something correctly. And also, when you buy that liability policy, the lady that has the home health or the graphics, if you're going out and you're calling on individuals, if you have employees that are calling on individuals in their own personal vehicles, be very careful. Ask them if they have insurance. Ask them what their limits of liability are. Check on your general liability policy, because if you don't have a commercial auto policy, sometimes in that business auto policy that you're going to buy, there's an endorsement in there for hired and non-owned auto vehicles. And this provides coverage for your employees that are making calls, going to the bank in the course of your own business. If they have an accident and there's a serious injury, and the state of Virginia, I think, is it still $25.50 on bodily injury and property damage for a claim?
I think so.
I mean, a $50,000 or $25,000 per person for a $50,000 limit for that's all that you have. If you run into someone that's got 3 people in a vehicle and they all have injuries, $50,000 isn't going to cover their medical bills. So you need to check what limits of insurance that they have. And also on your general liability policy, even though you don't have a commercial auto policy, you can ask that that policy be endorsed to include hired and non-owned auto. And the single most expensive claim that we ever paid in our agency was a $2 million claim for a salesperson for a company. He had an accident. It was a very serious injury. He had $25.50, and at that time the property damage limit was $10,000. That's all he had. His policy responded right away. It paid the $25,000. Our policy under the hired and non-owned auto, and then that company had an excess liability policy that had an additional $1 million over the underlying policy. They just went ahead and reserved the $2 million, and we paid $2 million for that claim. So that was under the hired and non-owned auto for an employee that was driving their own vehicle in the course of business. So that might be overload, but I'm sure Shannon and Mike, Shannon, you may have even had instances like that. But be very careful about who's doing business for you, and even check their driving records. You know, that there's all kinds of policies out there. Marco said, I'm Marco Warner's mother, like I said, but he said, Mom, be sure and mention directors and officers. You have a small business, but those directors and officers policies can be pretty cheap, you know, if to begin with. And that's going to cover you as the officer of your corporation if you're sued for, say you didn't have adequate limits, and that person says you as an owner should have known that you needed higher limits on this policy. There's all kinds of things that you can be sued for, but just don't feel free to or call someone that you do business with. Sit down with that insurance agent and say, talk to me. Tell me what, a lot of them will have checklists to go over and make sure that you're covered. Those business owners are going to be the easiest policies to write, but for the most part, most of you are not going to be on that business owner's policy. Colin is probably the one that would qualify as a business owner on that type of policy. But the rest of you, your policies are going to be, the coverage is going to be written separately. But be very careful that you're getting the coverages that cover your business assets and the things that you have.
Can you say that again about hired and, what did you say? On the
It's
policy?
hired and non-owned auto.
Hired and
Non-owned. Non-owned,
in case my employees are driving the company vehicle
yes.
to make a delivery.
Yeah.
Like that?
No, they're driving their own vehicle.
Their own vehicle.
Yes. You don't own it. It's a non-owned auto.
And that happened to us, a company-owned vehicle at Virginia Community Capital. Someone was driving it, and a Domino's delivery person who was in their own car but had the Domino's sticker on the side hit us, tore up the front end, and our insurance company, if his insurance weren't going to pay for it, they were going to go after Domino's because he was on the business for Domino's.
Right. It's scary, but you might ask your agent for a checklist. Let's go over my exposures and let's check and see what coverages I have.
If we're using something like Grubhub or a delivery service that's separate, such as an independent contractor, would we have to be covered for something like that? Or would they be separate because they're through their own entity and company?
Like get a certificate of insurance. If they're doing, are they gonna be delivering for you?
Yes.
I have to see the contract.
Yeah, this is what I talked about. And one of the most common things I see is once people have already set up their business, it's, you know, I had this agreement with somebody. They gave me this contract. I don't know what to do. I'm in trouble. They're in trouble. Whatever. Look at the contract you have with Grubhub. And, you know, it may be the best $50 you'll ever spend to take the contract to a lawyer and say, you know, look, this is my lease. This is my contract with Grubhub. And, you know, this is the issue I'm concerned about. Can you help me with it? I see more people with leases and issues with with the space they're renting for their business than I do most anything other than setting up businesses. So, you know, those are things you don't think about. You know, you sign the lease, you don't read it. You know, you're 6, 8 months down the road, you're starting to feel a little cash strapped for some reason. You can't make the rent. You talk to your landlord. The landlord says, you know, sorry, pay it or go, and you want to close the doors and walk away. You're so discouraged. Get the contracts that you sign when you start your business up with your lease, with distributors, whatever. Take a look at them, read them. If you don't understand them, pay $50 to a lawyer to have them explain it to you. That's real handy advice to hopefully avoid problems that could rise up in the future.
Make sure about the hold harmless agreements and the contracts.
Yeah, I mean, a lot of contracts will have hold harmless agreements, or you may want hold harmless agreements. Basically, they agree to hold you harmless if something happens that they're responsible for that you could possibly be held liable for in a lawsuit. You're dealing with people, and a lot of people you can trust, a lot of people you can't. Lawyers, one of the first pieces of advice I learned practicing law was plan for the worst, hope for the best. And by plan for the worst, read your contracts, draft your contracts. If somebody lets you write your own contract with them, go to a lawyer. You control the contract drafting. You control what's in there, and you can negotiate with them. Even if somebody gives you a boilerplate contract, this is our standard contract, sign it and go on, look at it, and if you don't like something in there, say, no, I want to talk about this term, I want to talk about this term. You'd be surprised if they want your business, they may change the term in your favor.
And most all contracts are going to have an insurance section. And it's going to say whether you add them as additional insured on your policy or they add you on their policy. So be careful about that. I'm not sure, like I said, I have to see that contract.
And a lot of contracts, and your contract should, if you're dealing with distributors, particularly in the food industry, ask for that certificate of insurance that she's talking about. Show me that you are insured and you are covered for this in case something happens, because I don't want to be the only one dangling on the hook here. And you know, you just walk away, say I'm filing bankruptcy, and you know, that leaves you dangling, and you with hopefully a lawyer to help you, but they may be looking at you as the deep pocket or the only pocket that money to make someone whole is going to come out of.
So what you're saying is like the company that I'm mainly dealing with, I need to get in writing a contract that they're going to be reliable if something were to happen with one of their products, and see where I fit in that.
Yeah, if you don't already have a copy of the contract with
I
your,
don't have one.
okay, get one and look at it.
Okay.
Very important, you know, in your industry, in what you're doing, yeah. And see, are they insured? Are they going to cover you in case something happens?
Okay. And what was that on the tail end of that you all just said about a certificate if something gets
Certificate of insurance. They certify or give you a certificate from their insurance company. We, you know, ABC Insurance Company are insuring this company. You know, here's their policy number. Well, I don't even know if they give you a deck sheet or not. They may not. Probably
Usually
not.
don't. Usually not. It's a lot. It's a changing world, and the one thing that we're seeing a lot now is that the cyber liability. If you're doing the graphics, the media, you all kinds of exposures to things that we didn't talk about 10 or 15 years ago. But if you're if you're taking someone's personal information, if you're in the healthcare portion of that, if you're writing down their health insurance, you're putting on information, you're putting on a computer. If you're taking credit card information from someone, if you're gathering information, and that is hacked, then you're subject to all kinds of fines. You have to provide coverage for that, or some type of coverage for that individual to see if your information is used and you're injured in any way financially, your personal information is out there given to someone else. It's a scary world. And again, Colin has his head in his hand right now. I don't hope he's not crying. But I'm using him as an example because that business owner's policy, most likely that he's going to buy, is going to have some level of cyber liability in it already, because the companies are coming of age and incorporating that. But most of you are not going to be eligible for that type of business owner policy. So, and some of your contracts that you deal with certain entities as you grow that might want your services, they're going to specify that you have cyber liability. That's the one thing that we're seeing incorporated into a lot of these contracts, especially on our healthcare accounts, that that they have very high limits of cyber liability. But if you get hacked, if someone with 100,000 medical records gets hacked, and then you're subject to all types of government regulation, then you're going to have to pay fines. It's very expensive. So just be cautious about that, and look for that in those contracts.
Is that typically in general liability, or is that a separate policy, or?
It's probably a separate policy. Sometimes what I'm referring to in a business owner's policy, it's that type of business that does not have a lot of exposure to that type of things. And then those ancillary coverages the limits aren't very high. You might have a $50,000 cyber liability limit, but if you had a cyber liability breach, it's going to be it's a lot more than the 50,000 limit for most companies. So it's usually a separate policy. But because we're writing so many of those now, the price is coming down. And are any of you a not-for-profit? If you're a not-for-profit entity, then the rate on a cyber liability policy is about half what it would be for a for-profit company.
Yeah.
So.
Yeah.
What about the service like Square or some of the other services that are out there? Do they typically cover that, or do you need a policy in addition?
If who would cover it?
Square, the credit card?
Yeah, any of the Square's just one I can think of.
I know for my firm, we use Square in the office, and we are covered somewhat by them, and I would think that would be standard for anybody who uses it. We also, due to the nature of attorneys having to have confidential information in the office all the time, our malpractice coverage carries a cyber protection policy with substantial limits as well, which I think the last time I looked at it, we would be covered with that. But I think Square does things, because I think everything is processed in-house at Square, except just at the point of contact with the card. I would probably read my agreement or go online and check Square just to double check to see how that would affect you. I know when we first started with credit cards with a local bank, I had to provide them a certificate of insurance, my malpractice insurance, so that we had some kind of cyber coverage for just the credit card company. That was back in the old days. This is like Barbara said, this is kind of scary. I just finished helping set up a young lawyer's practice over in Abingdon, and kind of hand-holding her and walking her through everything she needs to do to check the lists. And I told her it's the most exciting and the scariest thing you'll ever do in your life. It really is. You're in total control, which means you're in total control.
And there are agencies like our agency that we provide services to our insureds that would give you policies to pass out to your insureds. to your employees, like no talking on your cell phone while you're driving. If you have no cell phones while you're waiting on customers or checking out someone or looking at their medical information, they can snap a copy of that information with their phone. There's all types of policies and procedures that you need to put in place. We help our insureds with those types of manuals. We also provide those types of things that you want to that you want to put in place. And you can ask your agent, do you have those types of information that you can supply for me? Because it's important now that you have a policies and procedures manual. Shannon and his, I don't know whether do you help with that type of thing? Or
I've done a couple of those. One of the things about Virginia, you've heard Virginia is what's called a right to work state. It's also an employee at will state. You have the right to work without being forced to join a union, but you also have the right to get yourself fired for any reason your boss says so. You come in one day and you're wearing a hokey hat, like at my office working for me, you're fired. And legally, I can do that. Now, I'll have an unemployment claim put on me, but you have no right as an employee to a job unless there's an employee handbook or an employee manual which can serve as a sort of a contract between you as the employer and them as the employee. And if you do have one of those, set forth a list of rules. Like you said, no talking on your cell phone while you're at work, punch in here, wear this appropriate uniform. That gives you a little bit more ability to manage your employee, and it gives your employee a little bit more of a feeling of comfort. As long as I'm obeying the rules, I'm going to be okay. Think about one of those as you start to grow. It could be kind of helpful.
you might be able to pull those off the internet. The boilerplate. But
You can. There's boilerplate, but for a lot of the stuff that 20 years ago you'd pay me $300 or $400 to do, you can get for $50 off the internet, and that's fine. Just remember, when you are your own lawyer, you'll come to see me at some point.
SBA.gov would be a good place for some templates on employee regulations and so forth, and policies. And would you suggest, Shannon, if you're hiring a consultant or a contract employee, to have something in place in regards to their conduct if they're working, representing you at whatever it is? Do you suggest that they have something in place in the contract that stipulates?
Absolutely. Like I said earlier, if you have an independent contractor that's working for you, even if all you have time to do is to handwrite something down about what you expect and what they expect, and you both sign it and date it, that's something. What you don't want to be involved with is the guy mowing your yard. You told him to clean these rocks out before you mowed over them, and he didn't, and a rock flew and broke through a neighbor's window. You didn't tell me that. Yes, I did. No, you didn't. Yes, I did. You're going to end up having to pay for that window. So have something in place, even if it's just something scribbled down and signed, whenever you're dealing with an independent contractor.
If you go back to the automobiles and employees, for instance, this evening, we do fittings, and one of the employees had to take the scrubs to the vocational school at Buchanan County. She didn't want to take the company vehicle. She wanted to take her vehicle. Can I have her sign something saying that she's not to be on her cell phone in her vehicle as long as she is on the time clock?
you can have her sign.
Can I do that?
Well, you can do that, but I don't know how it would hold up.
Yeah, you can have her sign it, but it's up to her to abide by it. If she's in an accident and it's determined she was on her cell phone, she's violated that agreement with you. And whatever the agreement is, you can say, well, I'm not responsible for anything. You were outside of your employee restrictions. So, well, possibly, yeah, you could possibly get them to do that. Now, there's going to come some legal technicalities there with, owner and employee liability, the law may still consider you as ultimately liable for her actions due to respondeat superior, the doctrine that the owner is responsible for the employee's legitimate work-related actions. If you have that agreement, though,
It would be helpful.
it would be very helpful, very helpful.
The other thing it does too, even from a psychological standpoint, you're setting the ground rules down right then. This is my expectation. And a lot of times, just like with kids, you have to give them boundaries so they know what their expectations are. But you see what I'm saying, though. You're just not only from an insurance, from a legal standpoint, but just from a leadership standpoint at your place of business. You're telling them, this is what I expect. This is what you can do, what you can't do. And then if they go beyond that, then they have clearly broken the rule that you set forth to begin with.
Our agency, we have the employees use their vehicles in the course of business. So each year we get a spreadsheet, and I put down my name, my insurance company, my policy number, the limits of liability that I have. So if you have 2 or 3 employees and you have to send someone out, and you look at this list, and Mike has 25, 50, and 50, and Shannon has 50, 150, and I have 250, 500. You're going to send me, because it's going to be less likely if I'm involved in an accident than that my limits are more sufficient to cover a loss than Mike or Shannon's. So I would recommend that to anyone, even if you have only one or 2 employees. Have them write down their limits of liability, and provide you with a policy number and effective dates, and keep track of that.
I'll say, take the call. Here's the news, take the call. Oh, I just take mine. I'm like, God, be careful, Look both ways, and, work out. Yeah.
But remember, who's in charge now?
But I'm paying the extra insurance.
Yeah.
To put that, in a business, because it's not
That's what I'm
cheap
saying.
at
You're
all.
in charge of that.
So you need that policies and procedures, that safety manual, the policies and procedures.
That's-
And you might want to let them take their personal vehicle, but it's not a good idea.
I'd rather wreck that one that's already paying all that insurance on. Yes.
Well, even if you have a,
Because I got extra limits on it, just in case.
Yeah, that's what you have there for,
Yeah,
right?
I have to, because
yeah.
you don't know what you're dealing with until they get the car.
Yeah, that's true.
Do you check the MVRs of your employees?
No, I didn't think of that, but I should have, because I'm married to a safety guy.
Yeah.
I don't know why that went past me, but when y'all said that, I thought, oh my God.
Well, that's one thing
Yeah, so I will.
that we're seeing now, that, as an owner, if that person were in an accident, they could come back and say, you didn't check the limits. Why? Or this person had a DUI, they had a series of accidents. Why didn't you check that MVR and make sure that this person that's even in your vehicle was driving, should have been on the road?
And it's what, $10 to go to the DMV? Tell them to do it, and you'll pay them back.
And some companies have that as a terms of employment. You bring your MVR with you, and we'll look at it.
I've had younger employees, and, they've offered, well, I'll run to the bank. Oh, no. You watch the front, I'll be right back. I've done that a lot. But we do have to make deliveries. We go to Mountain Empire, we go to Abingdon, we go and do fittings, and then we take the product back. And so we are on the road. It's not just behind the counter selling stuff all the time. So I'm glad y'all said that. I'll get on that tomorrow.
As you grow and as you get more and more employees, there's a couple places I would probably recommend that you look that you may not think of. There's a website called Virginia Judicial System, and you can go on tabs on the left-hand side. It has a little tab for case information, and you can look at every county in the state and every city in the state, their court records. Sometimes they miss things, but That's the closest thing you're going to get to getting a full-blown rap sheet on somebody, is to see what they've been charged with and convicted of. Second place, particularly if you have a lot of people that your employees are dealing with in the public, Virginia State Police website, sex offender registry. Okay?
I was just thinking of a situation, it's fairly recent as far as the law goes anyway. It kind of combines what you were talking about, if I hire somebody and they mow and break a window, or with Melissa, what she's talking about with employees. If somebody has done something that, if an employee, let's say for instance, my person is, I know they have mowed over rocks and, damaged things and whatever. And let's say I've spoken to them about it, but I haven't taken any action. Now, the case I'm thinking about where an employee was driving a big truck and was, I forget, drinking or high or something, and had a wreck and killed another person. The company knew and that person had done that before and did not do anything as far as disciplinary action for that person. Now, that company being sued for millions of dollars because they knew it and did nothing about it. So I assume that same thing would apply for myself. Or
Absolutely. Absolutely. The general law, like I said, the general law in Virginia is the master, the employee, that's the actual legal term, master, is responsible for the acts of their servant, their employee, if that servant is acting within the scope of the employment. And where the litigation comes in is what is in the scope of the employment. Driving a truck for you while drinking, well, they were in the scope of their employment driving the truck, but you have specific rules. They were drinking. You knew they had been caught before, and now they're caught again. Well, you should have checked. We're going to be liable now, even though they were drinking, and they shouldn't have been, and you had rules. They've been caught once, and you let them do it again, and you didn't check.
Or back on those signs on your car, that's not counting just a little like size Trump stickers or something.
No. It's just, unless you're, unless it's a business.
I know, but that's what it is.
Yeah.
I had just ordered them because it's just a little sticker and they come off, but it's not the ones, what is it? I can't think of the word.
Magnetic.
They're not magnetic. Anyway, you can take them off and you stick them again.
Yeah, oh, you can put personal stickers, you can put, as long as you're not advertising your,
That is what it is. I'm
So
advertising my
if it's a
business.
company name, but it's a small sticker, it
It's
still
a small
counts.
sticker.
oh, I thought you said Trump.
No,
Well,
a
I
Trump
said,
size
no, I hate
sticker.
Trump sticker.
I'm sorry.
You know how size the Trump stickers are, like the 20
Trump.
pennies?
I thought you said Trump sticker, I'm sorry.
So
Debbie, if you have that on, if you have an accident and you forget to take that off before the police arrive or somebody snaps a shot of it, yeah.
even if you got on your window or something, no matter what they do.
If you're using that vehicle in the course of business,
I don't have one on it yet. But
Yeah.
I've got them in.
again, call your personal lines agent and just say,
I'll see what.
yeah, okay.
What if she is getting paid by the business to use her personal vehicle to advertise? Will that work somewhere?
It's a personal vehicle. There's an exclusion in a personal lines policy for business pursuits.
But if you were using a
Well,
vehicle like that, wouldn't you be counted on your taxes as a business expense?
Michael have to
If you
answer
put,
that.
I mean, if you put your sign on your vehicle, I mean, wouldn't that have something to do with it too? Whether you
No, what happens there is you actually got to put your vehicle into the business. You've got to use it for more than 50% for business to be able to depreciate it. Better way to go is to keep track of your mileage. That's what I would do. Get you a calendar book, write down the date, start mileage, end mileage, where I went, and total that up at the end of the year. This year, the mileage rate's 58 cents a mile. So instead of going through, well, I've got to put my vehicle in the business, I only get to depreciate half of it. I've got to go through all this legal stuff of putting it into the business name,
Mhm.
the whole thing. Man, just count the mileage. That's the best way to go.
And I think if the company pays you for the mileage on your vehicle, that's non-taxable.
That's correct. What's happening there is if you turn into your company once a quarter, no less than once a quarter, your mileage record, they will reimburse you for your mileage. It should be at 58 cents a mile, okay? And if that happens, that's not taxable income to you, but it's deductible to the company.
So you can write yourself a check every quarter and not have to pay taxes on it,
That's correct.
and write that amount off as a business expense.
But what you got to watch, and we keep saying it a lot, what you got to watch is you can either take mileage or take actual expenses. Can't have them both. Okay? I advise my clients 9 times out of 10, not always or never, but
Right.
9 times out of 10, your mileage is going to be your best way to go. It's easier to keep up with. You're able to cover, this is exactly my business purpose and what I did with my car for my business purpose, as opposed to, well, let's see, this tank of gas today is going to go for the business. Well, you can't prove that. So I would suggest using mileage, keeping track of it on account.
There's some good apps for your phone that uses
Right.
your GPS and will even keep track of where you went. It's fantastic. And at the end of the month, you can then keep your personal and your business mileage separately, and then just run a report for your business and turn that in.
Yep. Yeah. Go ahead, man.
Well, nevertheless, though, if you're gonna, like say, I wanna get a sign and put on my vehicle, name of my business, whatever, I still need to get the business insurance, even though I may just be taking mileage, or counting mileage
Yeah, because
for that vehicle.
Yeah, if that's going to speak to the insurance part of it. But from a tax standpoint, whether you've got the sign on there or not, if you're using your vehicle for the business, keep track of your mileage. The mileage doesn't care what vehicle it came from.
Yeah, if on my personal lines policy, I don't use my vehicle a lot on business, but I think there's a question on your person. Do you use it in business? Now, me going to my CIC class, I took my vehicle, but I didn't have a trust point sign on it. I use that. And your personal lines, if you use it regularly for things like that, and you need to answer that question on your personal lines policy, it's probably going to be rated up a little higher because you're using more mileage. But I'm talking about when you have those signs on the vehicles like paint on the side. Just be careful.
People, right?
Pardon?
Other people can put the sign on, right? Just not me.
Well, that's now that's going to be advertised.
That's advertising.
That's advertising for me, but not them.
Right, but if they do anything for you in the capacity of then that's advertising, fine.
No.
Yeah, as long as they're not performing services for you.
Yeah, there won't be there's no liability there, I mean,
Don't do nothing for me.
that's fine.
They're just,
Other than that.
Call Debbie. And your son's brewery, that's exciting. And
And it's not just going to be a place to get adult beverage.
yeah,
He has an insight, which we both do, for it to be a place, there's going to be a small conference room. If you have a meeting with a client, you can use the conference room. It's going to have a lot of things for the community involved.
well that's really nice. And of course, he's going to have more exposures like liquor liability, product liability, but that's exciting.
Get to know your ABC rep, because there are a lot of hoops to jump through with alcohol licensing things, a lot.
Yeah, as he said the other day, Mom will just be partners and learn this together, so that's what we're doing.
So back to her question with the magnetic signs on the side or the wrap or whatever. If there's a magnetic sign on that vehicle to advertise your business, you need to have a business, need to have business insurance for that vehicle, or business rider or something for that vehicle if you're advertising on the vehicle, right?
You should check with your personal lines policy. Because a lot of the policies, most of the policies have an exclusion in there for that type of thing. I'd check with your personal lines agent and just say, I've got this sign on my car, I'm gonna use this in business. Is there any coverage, or can you write me a commercial lines policy?
I'll just get mine wrapped. Can you do mine in that vinyl?
Now, the question comes down to, why would I want to count my business in or my car in my business anyway? Now, if you have a vehicle that you're using 100% or more than 50% for your business, and it rates over 6,000 pounds, like a larger type truck or an SUV, there is a Section 179 deduction where you can take up to $25,000 of that vehicle off on your taxes for that year. Okay, so that's obviously going to be more than your mileage unless you're traveling a whole lot. Okay, the issue is when you go sell the vehicle back, you may have to pay gain on what you sold the vehicle for because you've depreciated it down more than likely close to zero. Okay, with mileage, we're not looking at that. So if you got a larger vehicle in your business, you're using it 100% for your business, yeah, let's look at putting it in the business and depreciating it. I'm okay with that. But if it's just like with my business, I don't have my car in my business because I just travel back and forth to the Bluefield office or maybe to the college, to a client's place or whatever it is. It's not more than 50% of my travel. Okay, so if that's the case, and I turn my mileage into my business, I get reimbursed for it, and I'm done.
And the benefit, like I said, the nice thing about that is you get a pretty fairly substantial check at the end of every quarter if you pay yourself right.
58 cents a mile.
Yep.
I haven't turned in my trip to Virginia Beach yet.
You got till December 31.
Okay.
I have another insurance question. If you use your car for business and you have an umbrella policy, is that enough to cover a regular liability plus an umbrella coverage?
If that's all you're going to be sued for, that's a tough question. It's
Don't tell me no.
How about sort of? It depends.
yeah. I have a $500,000 personal lines policy, and then I have a $2 million umbrella. Sometimes those umbrellas are pretty cheap. I mean, $200 or $300. So people don't realize how cheap they really are. But if you have, of course, if you have boats or four-wheelers and things, the price increases. But if you have a $100,000 auto policy and you have a $250,000 house or even a $150,000 house, your personal assets are going to be exposed if you're at fault in an accident and the court deems that you need to reimburse this person $500,000 because your policy is only going to pay that $100,000. Of course, if most umbrellas you have to have underlying limits of like $250,000 on a personal lines policy, and then they will pay over that. So I think my umbrella is $300 for a $2 million umbrella. It's fairly cheap, and it sits over your homeowner policy. It sits over your auto policy. So it gives that extra layer on both of those coverages, both policies. So check with whoever you have insurance with and just ask what an umbrella would be. But you never know what a claim is going to be.
No, I've been in litigation where I'm representing the plaintiff and the person who injured my client, their insurance company limits are $100,000. My client's injured to the tune of medical expenses $400,000, for example. I'll get a call from their insurance adjuster. Yep, we're paying our limits and walking away. Bye, thanks. You'll get your check when it's time to settle. And then the defendant, the person who hit my client, sitting there, and they're looking at $200,000 or $300,000 coming out of their own pocket just to compensate my client's medical bills. Where are they going to get that? Their house, their car, their retirement, possibly, their, whatever. So, check to see what you have.
It's a scary world out there, isn't it? I know.
But here's the thing. I thought about that. That is true. We're giving you all the bad stuff, right? Okay. I mean, for the past 85 minutes, we've told you all the bad stuff that could happen. But here's the thing. As you're going through this process, you're learning, right? You're figuring out what's going on. we're not up here trying to shill for us, but we are telling you that if you have a tax question, an insurance question, or a legal question, you got people like us here that you can call and ask. That's the whole deal. You're not in this alone. This is not, okay, we're going to throw Debbie out to the wolves, let's see how she does, okay? Although my money's on you,
See if my stickers out.
okay? But the point is that we're here to help you. That's the idea of the whole thing, okay? I want to sidebar that just a little bit with, if you have an issue before the end of the year, talk to me or talk to your accountant, okay? Because that's called tax planning. Mike, I bought a vehicle. Mike, I bought a piece of machinery. Thinking about starting a retirement plan. How's it going to affect my taxes? Well, let's structure it this way. Let's ask a few questions. Let's see how this is going to work into your tax return. Do we need to set an estimate aside? Whatever it is. Before December 31, I am a tax planner. We can change whatever you need to change. We can make it into a plan. We can do it the way that is going to work best for you and to save the most on your taxes. If you come to me after December 1 or 31, I'm a tax preparer at that point. The year is done. We can't go back and change it, okay? So it's important once a quarter, once every half year. Talk to us before the end of the year, something like that. Here's what's going on. Here's my situation. What do you think I need to do? Let's work on it together and make sure that you're in a place going into doing your return in the next year that you've done everything you possibly can to take care of yourself.
And another thing about getting scared and hearing all these horror stories, you know the potential is out there and these issues are out there.
Mm-hmm.
So if you keep these on your mind and you see something that looks like it may mushroom into something bad, you've seen the issues, you've identified the issue, you can start trying to plan and work for it from a legal, insurance, or accounting perspective. You know this kind of thing can happen. You know to look for this.
Is this a summary?
It sounds like it's a summary. I don't know if they have more questions. We're there. Before
That's a
we
good
went through
summary.
it, I think it comes down to talk to us. That's the thing. We're here for you.
And I would add that, Mike, we are professionals. I've been doing this a long, long time in the insurance business.
I mean, 20 years.
And we rely on our CPAs. We rely on attorneys. And we all work together. But I just advise you to look at your documents. And we don't write. We will not write even a personal lines policy with less than $100,000 limits, because it's just what Shannon spoke to. We're not doing our customers a service, and then we'll have insurance come in and say, "Oh, I got this a lot cheaper. Look at this." Well, the company that you see here on TV and so forth, they wrote them a $25,000 minimum limits in the state of Virginia. It is less. But we don't write. If you come in and want that policy, we say you go someplace else, because it's a disservice to you. But you need to look at the limits. Make sure you know what the limits are. Most liability policies are going to start $1 million on a business. So look at those limits and make sure you have the adequate limits. Look at the contracts. See what the contract says. If you need to be an additional insured or on a policy, someone's policy, or they're asking you to be an additional insured on theirs, let us know. Let your agent know about it, because they can advise you. But that's the reason that I guess we're sitting up here and you're doing what you do, because I can't wait to come in and see your businesses and I know what Clint can do with a beef loin. So
I'm excited to see what Clint can do with the
Oh, it's wonderful. Yeah, he did one for Christmas one year for me, and it was absolutely delicious. So anxious to do that. But just read your documents, and feel free to call on people.
Yep. You got it.
Stupid question.
No such thing.
Okay. And this is kind of a little bit off of what we've been talking about, the scary stuff. If I was working for a corporation or something, I would have a 401k, nice health insurance, and so on and so forth.
Mm-hmm.
Okay, when you get in the business where you kind of start thinking about, okay, I'm got that salary, I'm paying in my Social Security, how can I put up for my future? I mean, I'm getting old. I got grandkids, okay?
You could, if an LLC or an S corporation, you can set up a retirement plan.
Is, what's the best way to, because I know I've got a Roth IRA, a traditional IRA, they were getting nothing, okay? I've got, some stuff in with Virginia Retirement, but you can't touch it, you can't add anything to it.
Right, right.
So what do you all suggest, so I can take care of my future? What do y'all suggest? Because, you know, there's not a lot there, but I want to start trying to put more back for my future too.
Well, I mean, the fact that you got a Roth and a traditional and these different retirement plans, don't look at the car, look at the driver. And what I mean by that is you're saying, well, it's not making it's making next to nothing. Okay. That IRA can be in whatever you want it to be. You can roll it over to something that's making a better rate.
What's making good, what do you, I know CDs don't get anything out.
Well, here, okay.
Give me an
I can't really give you investment advice because that's not what I do.
Right.
Okay, but I will tell you this. I will give you the general thing. Okay, the general thing is that the older you get, the more you want to put money into things that are going to preserve your principal. You want to be more risk averse as you get older. Because I will tell you this, just as, and I know you're 29, you've got time, it's fine, okay. But the thing is this, I've seen people in their 401ks as they got older, especially during the 2008 real estate bust, their 401ks went gone. And everybody thought, I lost all this money. Well, they'd still made money in it, and if they waited it out, it was going to come back up, okay? I would say talk to your investment advisor. But what I'm saying is that as there are different investments out there that are still covered under the umbrella of your IRA. You have the power to decide where it goes. That's the thing. So yeah, just because that traditional IRA is not paying you anything. Well, it's not the IRA that's not paying anything. It's what the IRA is invested in. It's not paying anything.
Okay.
You see what I'm saying?
I didn't know.
Yep. You're welcome. And that was not investment.
Is it like
Cover my bases.
counting device?
The counting
Device,
advice,
yeah.
yes. All right. Any other questions or concerns? Have we convinced y'all all to just go shut the doors at this
Yeah, well, I'm
point?
closing
or-
tomorrow, I'm having a sale.
Okay, there we go.
No.
Liz-
Thank you all for all of your advice.
Oh,
Unless-
Mr. Clan, you got one more?
One more question.
Go ahead.
I have some things that I need to do to get my house ready
Okay.
to accept guests.
Yep.
But I want to be able to use that as tax, as the expenses.
Yes.
So at what point can I begin to count expenses even though I'm not accepting guests yet to make any money, so to speak?
Is it available for rent?
No.
When it's available for rent, that's when it crosses the line from getting it ready to now it's available. That's your line. Even now you say, well, I haven't gotten any money in yet, but have you put it out there as being advertised? If the guest came in right now, could you take them? Right now you can't because you're still getting things together. But when you do, that's when you can start taking it off as expenses. Now, the stuff you're putting in right now, the improvements you're putting in right now, we're going to capitalize that. Let's depreciate those. Okay? They're going in as part of the investment of the business to get it ready. So let's depreciate that when the business starts, over 5, 7, 15, whatever year, whatever, depending on what the asset is. So that investment isn't lost. You just are not able to expense it yet or depreciate it yet because you haven't made it available for rent.
But do you have to have your LLC set up first to claim it as an investment?
Not if it's
Or
a single
EIN
member.
or
Well, see, now here's the thing. If it's a single member LLC, is it just you?
Right.
Okay, if it's just you, you don't, unless you have employees, you really don't need a federal ID number. Because it's going to be reported as a Schedule E or Schedule C on your tax return. So your Social Security number, you are the business. It's you. Okay? So that's the case. Of course, Shannon will tell you, get your LLC set up and make sure that you're covered because you don't want to start renting out to people without having that protection, right, Shannon?
Exactly.
So you want to be sure you're there. As far as tax purposes are concerned, you could be accumulating that investment. And then when you have your LLC ready to go and you start making it available for rent, then we can go ahead and count it on your tax return and get that expense back.
Okay, so what I would need to do is just keep track of everything?
Yes, ma'am. Keep track of your investments so that when that LLC starts, you drop that stuff into the LLC.
Do you have an LLC set up yet?
Not yet.
Not yet.
There you go.
Yep.
Ice cream bucket. Make sure it's Neapolitan now.
I'll see you next
Come on,
year
Bill.
with,
None of this chocolate stuff. I mean, it was one of these great big tubs, too. It wasn't this little stuff. Funniest part, it was a construction guy and he had Velcro seats in it. The things you see.
On our menu, we're planning to name some items after things in Richlands, like in years past.
Mm-hmm.
From a legal standpoint, are we allowed just to put that on our menu, like, say, the Brickyard Burger or Swinging Bridge Salad, or, you know, just something? Do we have to get permission from there?
As long as the name you're using isn't trademarked, you're fine.
So I need to find out if you're trademarked.
And I don't think you'll find that the Brickyard is trademarked or the Swinging Bridge
No,
is
I
trademarked.
Red Jacket is either, but
Yeah. If you,
I don't want to have menus printed up and somebody come in and say, oh, we can't do that.
no, if you put a Bandy Burger out there, I am all for that.
If you are going to use someone's name, make sure that you get their permission, obviously, before you do that. I mean, you know, somebody may get food poisoning. Hopefully they won't. But you know, my uncle's in the hospital because he ate your hamburger. I'm going to come to your house. Yeah.
The insurance certificates, are we allowed to keep a copy of those? Is it best that we keep a copy?
Oh, yes.
Yeah.
So they should have no problems giving us a copy when we ask for it.
No, it's absolutely not.
Unless they're not insured, and then you tell them to go home.
And that's for a current copy. Well, just with a current date on it.
Is there a certain time period for those, or do they?
No.
Do they run like from year to year, or?
Usually a year to year.
Well, they're annual, but you'll have, I mean, our policy might be October to, and someone else's might be June to 1920, but so you have to keep track of them and make sure you get them renewed.
Yeah, get one every year that you deal with them.
Think about the insurance card in your car right now. Mine's behind, I can tell you, because Misty will get me for not having the right insurance card in my car right now. So the thing is, it's easy to forget and let go. You know, so something I would imagine, kind of with your tax withholding, anything like that, just kind of have to remember and know it's coming. That's the biggest thing. Is that good?
All right.
Good. We'll give everybody a sticker.
I want two. I
Well,
want
let's give our panel of experts thank you guys so very much. We appreciate it. And at the end of the competition, Debbie is going to give stickers to
I'm excited. I really am.
We are too. It's very exciting what you're doing. I know what you've heard the past couple of weeks has been a little bit terrifying, but you're a couple of steps ahead of most people when they start businesses because you're hearing those things up front. Next week we'll be at the town of Bluefield and we'll be speaking to accounting experts. Show me the money. And
Next week is credit and managing a business. Is next week.
Show me the
Following
money.
week is.
following week is show me the money.
Yes, yes,
Okay.
you were
So
correct.
it's all about money.
It is.
Anyway,
Very
that's
good.
at the town of Bluefield, 6 to 8:30. And how many of you guys have started on your business plan? Wow. Yay. Have you been in touch with Margie to help you yet, or no? Okay.
I've done one last year, so I'm lived through that. I won't say that word out loud.
Okay.
So you've been done.
I've been done.
Well, great job, you guys,
For
and we'll
somebody.
see you again next week. Please don't bail out on us. There's more good things to happen. So. Thank you.